All right, I guess so we're the last panel for the evening. Everyone must be tired. So whoever's had coffee, I guess can pay attention. So we've got a very interesting panel today with global tech trends. I've got with me here Faisal Sultan from Lucid Motors, Ibrahim Hafeez from Griffin Gaming. We've got Ali. Ali, you'll have to help me with the last name. Madhavji, okay. Ali Madhavji from the Blockchain Founders Fund, David Nangle from Wasoko Emerging Fintech, and Dr. Jonathan Doerr from Antler. So, gentlemen, I think what everybody is curious about learning is, especially when it comes to the EV play with gaming and blockchain, and then Fintech builds upon it, and then Antler obviously is there facilitating the entire ecosystem from the early stage. I'll start off with you, Faisal. Kind of. First of all, can you give us a quick intro about yourself, and then would love to hear more.
Assalamu alaikum, everyone. So I'm actually born in Karachi, so I'll start there, and then basically moved to US at an early age, Canada and US, and really spent most of my time, but back and forth between Pakistan. And I've been an automotive guy right from the beginning. So Detroit, Michigan is where actually I call home. This is where I've actually spent most of my life. But and joined, I think, Lucid Motors about 5 years ago. Before that, I was actually working in Riyadh, writing the national industrialization policy for automotive for the country. And based on that, we invested into Lucid and also have 3-4 more projects that now the government has bought into the country. So, that has kept me busy. But now, I am the managing director for Middle East for Lucid. We have just started the first manufacturing plant in the kingdom for vehicles, passenger vehicles. It's 1 hour north of Jeddah area, where we have already assembled more than 1,000 vehicles. We started in September of last year. So the Saudi assembled product is on the roads in Saudi, and next couple of months, I think in May, we will be exporting it out to the rest of the GCC countries.
Amazing. I'll move on to Ali. I guess we'll just pass the mic down and...
All right. Glad to be here. So Ali Madhavji here, managing partner at Blockchain Founders Fund. We invest in and help venture build top-tier startups. We've got over 130 startups now in the Web3 space around the world, and we're Singapore headquartered.
Amazing. John?
Jonathan, partner at Antler Meetup. We're an early stage VC fund that invests in startups that actually found each other, or the co-founders found each other in our program. So we're scouting for 3 months individuals. For example, for the next cohort, we had 5,000 applicants, individuals. We select 80 people, exceptional talents. 85% of them worked or built already startups, raised money, exited. And then they find each other in our program. We do master classes, design sprints. Then we start coaching them within the program. And then at the end, after 10 weeks, we invest $180,000 for 11% in around 30% of the guys that kind of joined as individuals, and they leave us as teams. Mm-hmm. Exactly. That's what we do. We run programs in Riyadh, which we did in September last year. And now the second program is in Dubai. But it's the Meetup Fund with a P at the end for Pakistan. The reason for that is not only because it's very important, but I also lived in Pakistan for 4 years. I was a co-CEO of Doerr Asia for 4 years, and we sold it to Alibaba, as some of you might know. My heart is very close to Pakistan. That's why I'm a big supporter of Paklaunch, and that's why we have the Meetup Fund with a P.
Amazing. Ibrahim?
Thank you. Ibrahim Hafeez. I'm an investor at Griffin Gaming Partners. We're the largest gaming-focused fund in the world. We have about $1 billion to AUM. We're stage agnostic, so we do pre-seed all the way to pre-IPO, check size agnostic, and we invest globally. Our thesis is quite straightforward. We do anything and everything gaming, both on the content and infrastructure side of things. content being traditional gaming, infrastructure being anything and everything that impacts the end-game user experience. So we've done back-end scalable solutions, we've done social platforms like Discord, and then finally we're strategic investors. That's partly driven by our team who has been active in the gaming space for 25 years plus. Our LPs, 1/3 of our LP base is strategic capital. So AAA studios, publishers, sports teams, leagues, and so on. And then finally, our relationship with LionTree, which is the most active interactive entertainment bank. So we're long gaming.
And last but not least, Dave.
Super, thanks. Dave Nangle, I'm the CEO of VEF, founder of VEF, and we're an investment company. So we're venture capital mindset, but we're a listed investment company in nature. So it makes us a little bit different in that we're permanent capital, so forever money, which kind of fits for the jurisdictions like Pakistan where you need to play the long game. Our mandate is the crosswinds of emerging markets and fintech. So we're very long those two key strategic trends. And then we find our capital in places like Brazil, Mexico, in the past, Russia, Turkey, today, India, and Pakistan. We're stage agnostic. We can do small checks as low as $500,000. And we put over $100 million into our biggest companies in Brazil. And in Pakistan has been an adventure for us. We came in here, one of the earlier investors in fintech back in, I think it's 2017 or 18 with our first investment in the Finja. And since then, we've done Abi and Mahana. So we're long 3 assets in the market, happy and big fans of Paklaunch, and that's why we're here.
Amazing. So, Faisal, we've just seen Tesla continuously pump and skyrocket, at least as an investor. I know Lucid, I believe, is a Silicon Valley-based entity, and with a heavy investment from the government of Saudi Arabia, and the plant is here. So can you give us a bit of an outlook of how you see the competitive landscape in terms of what you're doing? What is the target market? Are you going to take Tesla head on? What's the end game here?
Yes, so we are, as you said, we are a Silicon Valley-based company, headquartered in very close to Tesla, within minutes of it. And a lot of our management actually comes from Tesla and some of the other traditional OEMs. Peter Rawlinson, our CEO, is actually the chief engineer for Model S. And the reason, the whole theory behind Lucid is really to have an option in electric vehicles that is truly a luxury product. A lot of us, have driven, and Mercedes and Audis. And then when we were sitting in Teslas, nothing, to take away from what they were able to do, but it was not a luxury product. So the differentiation between us and them is really the technology and the luxury aspect. A lot of people.
So the interiors are better.
Interiors are better. Our technology is way better. There is no comparison between the technology. Our motor size is about 40% less than Tesla, but gives 40% more horsepower. We also give about 14.4 horsepower per kilogram of weight, where Tesla gives 3. So there is definitely a lot of differences, and people who know the product or have experienced the product will definitely know that. And then hence the price difference. But the price difference is not that much. A lot of people have a perception that Lucid is a $250,000 per car company, but our product actually starts at $69,900. So, and we are now officially the most awarded car company with a single product in first 3 years of its production. We've won the Luxury Car of the Year award, where we have won the Car and Driver and also Motor Car Trend of the Year. So, these are just like, I can go on and on, but definitely we are the most longest range vehicle in the world. On a single charge, we give 883 kilometers. Oh, wow. It is unheard of in anywhere. Our closest competitor is a Model S long range, but that's 30% less than us. So we definitely have bought the technology, and I think we're taking the range anxiety away from people. You could have a Lucid Air and you could just charge it at home, and you will never have to go to a public charger, really, unless you are traveling from, let's say, Riyadh to Jeddah, where you will have to spend 15 minutes, 20 minutes to charge a vehicle, because we're also the fastest charging vehicle in the world. We can give you about 300 to 400 kilometers between 12 minutes to 16 minutes of time of charging. So we're trying to set ourselves apart. And yes, you're right, we will definitely take Tesla head on. Right now we have not, because we are in the luxury market. But our third product that is going to be actually manufactured in the kingdom also, starting in 2027 timeframe. The plant is right now being built. We're currently assembling the Lucid Air here, and we will fully manufacture the midsize, which will definitely take, it will be a $50,000-$60,000 car, so it will definitely take on mainstream Tesla models.
More affordable and greater adoption.
Definitely.
So I'm a little excited because this is kind of my thesis playing out with like blockchain and gaming and then fintech, and then Antler is going to help me. We're going to work together to try to facilitate this entire ecosystem. But Dave, I'll come to you. Given let's thinking in the future with Gen Alpha and how important gaming and tokenization and virtual currencies will become. What you're doing today, can you kind of walk us through how the infrastructure and the fintech investments that you're doing are, what you think is how they're going to facilitate this entire ecosystem in the future?
Yeah, very, very good question. And I'll talk to that as I talk about, what we're doing in the future of fintech and investing. And it is a very apt panel as I'm sitting here as a fintech investor, but me, the fintech investor 3-5 years ago, was investing in digital banks, lending companies, payments, almost fintech 1.0. More and more we're doing just basically embedded fintech. So, Lucid Motors I wouldn't even thought about, but start talking to Faisal before this. All I'm thinking about is credit payments. How can I get part of this? Where do I fit in this as a fintech investor? And same with gaming as we sit here together. You get into digital currencies and once again how people pay online, extract value online. So us as investors, I think the fintech industry, generally embedding even away from blockchain and gaming, a lot of the future investment and pipeline work is around embedded fintech. It is around electric vehicles. It is around solar, education, health, gaming. We've taken our hats and our expertise in terms of the infrastructure of how payments has worked, how credit works, the funding for that, interaction with banks, regulators, and we're putting our skill set, our hat, our capital to work in fields where people will say, well, what the hell are you doing in a trucking company? Or what the hell are you doing in gaming? That's not your jurisdiction. And our shareholders, our investors would have said that initially, until we start making the money and we prove that people like Lucid Motors, other examples, actually making most of their money from embedded credit or embedded payments. So it is a big part. And I think a lot of these companies and then co-investors like us coming on board as well, because we just bring something different in terms of a skill set and ideology to their focus in, just focus on gaming or just focusing on EV. We bring the financial aspect and our connectivity and our knowledge base. So it's quite a nice fit and it's a good panel in that regard.
Ibrahim, I cannot, my kids are on Roblox all the time. They're 8 and 10, and we're trying to figure out a way. In fact, while I was walking up to the panel, I had a request for some Roblox that I had to approve for the Apple family share. Walk me through, I know you're building for the present, but it's really Gen Alpha that I'm focused on in terms of what where all of this is going to converge. Can you give us the current state of gaming today? And then generally also, I know there's a global tech trend, but what are you seeing in the region, if at all, you're focused?
Absolutely. There are 3.3 billion gamers in the world today, evenly split between male and female, 50-50. 10 years ago, it was actually 10% female, 90% male. Out of the 3.3 million, majority of that revenue is coming from mobile, and majority of that is female spenders. So there's a high upside in terms of where the market is and where it's going. Currently, gaming as a whole is larger than music, movies, and publishing combined. It's a $200 billion business. Just one added data point, which is super exciting to me, is that just in the US alone last year, more people watched other people play games than Netflix in terms of minutes watched. So it's a very exciting ecosystem. Is going to continue to grow. Now the question is, what is gaming? A lot of people think it's effectively Roblox and so on, and which it is a huge part of it. But there's an infrastructure layer towards it. Fintech within gaming is super exciting to me outside of blockchain, with things going on with Apple and Epic, post-IDFA in Europe, fintech within gaming is very, very exciting, being able to build marketplaces on top of existing infrastructure. And we're seeing a lot of innovation within that regard. That being said, we're seeing a very interesting shift in today's world where even 5 years ago, movies were being adopted as games. But more recently, games is the forefront form of media. Just last year, 3 of the top 10 grossing movies in the box office were originally gaming IPs. Super Mario's, Gran Turismo, and there's another one I'm forgetting. But Last of Us was a show which is last year the most streamed show in the world. So it's the next generation, how they're interacting with content is via gaming. And we just recently saw that 2 weeks ago where Disney invested an additional $1.5 billion in Epic, Fortnite specifically. So as we progress in terms of content, gaming is at the forefront, and legacy brands are recognizing that. The kingdom where we're spending a lot of our time and effort is building that ecosystem, and His Royal Highness is a gamer himself and is very passionate about the space for good reason. But gaming, unfortunately, doesn't happen overnight. It's a creative-driven business, and there's a lot of talent that you need to be able to build the foundational work, and then eventually studios or infrastructure. But the investment that's being poured into the kingdom is nothing that we've seen otherwise. I come every few months, and it's just absolutely astonishing with the Esports World Cup coming up pretty soon. There's a lot of effort going into working with universities, building the relevant curriculum, and allowing not just students, but creators to actually go out and build what they want to, which in a business like gaming is very, very important. So we're quite excited, not just Saudi, but as a whole, where gaming is going towards. Yeah.
Great, amazing. So, and John, I'm gonna somehow tie all this together and bring this back to you at the end. I'm gonna go straight to Ali. Bitcoin's again soaring, and so the excitement comes back in. I'm gonna build a bigger position once it scales back. I think it's pumping too much right now. I don't like the manic state. Walk me through. Obviously that's the the exciting side that all the retail investors and everybody gets involved. But you're doing a lot more deeper stuff. There's actually an infrastructure getting built here, the future digital financial economy. So walk me through some of your thesis. I mean, what are you seeing? We talked about it briefly, but I would love to kind of see how you guys are investing. I don't think it's in Dogecoin, so I'd love to hear from you.
Yeah, absolutely. I mean, we are very active across the blockchain space, as our name suggests. We look at about 500 companies a month. We now have 130 companies around the world, and we don't believe in these sort of broad market thesis that you see generally in the market, because our industry moves so fast. Things that were relevant 5 years ago are probably a lot less relevant to some aspect and extent, right? So we've got about 25 open sub thesis where we think there's major problems in the space and no market leader or an interesting beachhead for someone to tackle that problem. And there's a lot of different things that go into that. I can give you some examples. For example, we think there's a massive problem on so the biggest use case for crypto or blockchain at the end of the day is still trading, right? There's a lot of other really interesting aspects, but trading is definitely the biggest. And in that space, for example, liquidations tend to be a problem. So if you basically have options out and it goes the wrong way and you get liquidated. And so we just recently invested in a company called Emoja that's doing liquidation protection as an example. And we think that solves a very big problem in the space that's sort of wide open. There's a lot of other things on the trading side. For example, we believe that intents are going to be a big theme this crypto bull market. And intents are essentially...
I was going to say, can you elaborate on that?
So intents are basically someone trying to execute a trade that says, like, if X happens, then I want to do Y. And so essentially, like you have, an individual has some sort of thesis or an institution has some sort of thesis, and they say, if Bitcoin does this or if Solana does this, I want to go do something else. And then they can essentially go and tackle that. And we think that this is a really interesting market. If you think about the entire OTC market, it's essentially people that are like, if something happens, I want to basically go do some trade, or I want to go liquidate some position, or, things like this. And so we think there's interesting opportunities to tackle some of that OTC market in the crypto markets, but then later on in traditional OTC markets, because these are massive untapped, markets that are essentially, given that they're over the counter, there's inherent inefficiency in it. And so that's some examples. If you take the gaming sector, we think there's still big problems, right? We started investing in blockchain gaming in 18. And one of the big problems that many of you may have seen with companies like Axie Infinity and many others is as soon as an asset gets a little bit popular, the asset price goes up, right? So these NFTs in the game that you need start going up in price, and that becomes its own barrier to entry to anyone that wants to join that game. And so this actually becomes almost like a self-fulfilling, let's call it negative prophecy, where you create your own barrier to entry. And so we think that there's interesting companies that can solve this in different ways. But one of the interesting ones is fully smart contract-based revenue sharing. So people with assets can basically lend it out, but say, I'll take 30% of the revenue that you make with these assets, you take 70, and it's all smart contract-based, right? So you don't interact with them, it's all digital. So we think things like this are quite interesting. And then lastly, given that this is a Paklaunch event, we're the largest investor in a company called Brushna. And if you're not familiar with Brushna, it's a very different take on gaming and hyper-casual gaming. And so the thesis there is, we can essentially expand gaming to a ton of other markets. So everything from education, training, social impact, and anyone in the world can basically make a game in under 10 minutes. And, we launched this, and there's 170,000 games created now. Miriam's a Pakistani founder, and we've got 2 million games played now across there. It's I think it's the number one partner right now with Jazz, which is the largest telecom in Pakistan. And so lots of really cool things here. It's a very different take, right? So a lot of people are trying to create one game. We're maybe trying to create 1 billion, right? So it's a very different way to think about, how even some of these things might evolve and shape over time.
So John, these guys are way out of my league. So what do you walk us through what you're doing in MENAP in terms of, what are the trends you're seeing? Are you investing in similar platforms, or are you doing the boring stuff I'm doing?
So I try. So what's good is that, so as I mentioned, we had in the region our first program in September last year in Riyadh. We invested in, obviously, fintechs. We unfortunately didn't invest in a gaming company. We invested in Web3, and we invested actually in an EV company, and the founder actually sits there and builds electronic motorbikes in Pakistan. So I think that's the good news. For us, it's very important that we get the best founder in our program. And we're looking for tech people. So we have normally around 40% tech people. These are people that were CTOs, manage 50 to 100 people, really want to become now a co-founder. They worked in startups. So 85% of the people in our cohort, as I mentioned, are either way worked or started businesses. And then we have domain expertise and we have business people. So we mix them all together. And what we see actually in numbers, so first of all, why we're in the region, why is it MENAP, right? So that's maybe number one. Obviously, when you look at pure investments, you saw the world goes quite down in last year. But so for example, Singapore took a 60% hit. We were originally from Singapore. The region took only a 28% hit, and actually in Saudi, we actually had an increase of 33% when it comes to early or VC investment, which is why we're obviously here and why we also started the first program in Saudi. Number two is from a topic perspective. As I said, we follow not trends. We're not telling the founders what to invest in. And what we see in Antler is that the most successful companies that we're investing in, so we're sector agnostic across the board, the most successful companies that we're investing in are actually companies where we have one domain expert in that knows the domain for 10, 15 years and says, this is the problem, right? This always works for us way better than two guys sitting at a table and say, okay, what should we build, and where can we raise the most money? And I think that's quite we're in this luxurious situation that we say, okay, we bring the best people, and then we look for the people that really know the problems, and then either way get a tech guy on board or a business guy on board to help them to solve that problem. And I think, obviously, as I said, we represent, gaming is coming, I promise. We represent obviously everything that is here, and last but not least, the biggest group of people that we had in the Saudi cohort were Pakistanis. Second were Saudis. Now in the Dubai cohort, it looks a bit different, but again, a strong Pakistani base there. So we're getting a lot of talents from Pakistan. As I said, one company is in Pakistan, which we invested in. So we're very excited about this, not only combining the talents in the region, but also then building and investing in companies in the region, hopefully continue sector agnostic, solving problems that are actually mainly here in the region. So that's what we're excited about to continue doing.
Awesome. So Faisal, walk me through. So I guess your manufacturing is primarily based in Saudi. Am I correct on that, or is this the only plant, or do you have other parts of the world?
No. So our first plant is actually in Arizona.
Okay.
Advanced manufacturing plant number 1 is in Arizona. It's about 45 minutes south of Phoenix, and that's where we started manufacturing the Lucid Air. And our second plant, which is first international plant, is now in Saudi, AM2. And we're assembling, as I said. So the kits actually come from Arizona, and we assemble the cars. And the purpose is very simple.
I was gonna ask, what's the core target markets?
I think the reason why we are doing it, because as some of the panelists are also saying, there's a amazing transformation happening, and I think Saudi is just simply leading that in the MENA region, and there is so much to do there from an opportunity point of view, right? So Lucid really looked at many different locations, and I think we saw that the central location of Saudi Arabia logistically makes a lot of sense. It is the biggest market in the world where cars get imported 100%. Nothing gets manufactured. So the local need is there. Again, going back, the need is there. That really drives it. And then on top of that, there are so many incentives available. This country has a national vision that drives human capital development, localization, local value add. The raw materials that we use in the cars are almost 100% available here between the MAD and SABIC. Some of these companies are sending it to China and Europe and North America, where they get value added, get converted into parts for the automotive, and then those automobiles are coming back into the country. So I think there was about 4 or 5 weeks ago, His Royal Highness had an interview, and where he said, we are the single largest nation that exports automobiles in imports. So definitely we need to turn that around, and that's what Lucid is going to try to do and help and create a lot of jobs. And I think in the region there will be a spillover effect where definitely the countries around, including Pakistan, I think can play a role in the localization and also supplying the human capital towards these projects.
So I'm assuming there's going to be a whole automotive supply industry that's going to be, so you can basically offset the export of raw materials, and then
so we're targeting 40% localization within the country, and hopefully 60-70% localization within the region, because I think the only way to be competitive is to have your best friends who are your component suppliers around you. So the logistic, because during COVID times, we all learned one thing is, you don't want to be dependent on, sending parts all the way across the globe. The prices skyrocketed of pretty much everything. The inflation curves went up. And in order to control that, they have to be very close to you, just in time type of a manufacturing concept.
Sure. Great. I'm going to do one round and then we'll do a closing thought. So, Dave, you've invested heavily in countries like Brazil and India. walk us through some of the new emerging trends that you're seeing in these markets, because obviously, especially from a Pakistan perspective, those same trends come to Pakistan with a lag effect. So would love to hear that, what are you seeing as newer deals in fintech, and what have you invested in, and then how do you see that in Pakistan since you've invested that there as well?
Cool. A few points to share. I think the key thing for us as emerging market investors is that every market is different. There's some nuances and some similarities as you go through different subsectors and sectors and aspects of investing, but we find a lot of differences from a Brazil to an India to Pakistan, even Mexico, when it comes down to population size, scale, growth, demographics, what the regulator does, what the banks do, what the telcos do, new economy, capital going in, wealth levels. There's so many different independent parts to each of these scale markets, which makes them interesting or not for our capital, or makes a subsector interesting or not for our capital within them at a certain point in time. So we're always looking for these scale emerging markets. We're always looking to do the top-down work to find the right ones at the right time. I think right now, India is probably the hottest market on the planet. Emerging markets, arguably, globally. And everyone always plays a scale game in India like they did with China in the past, but India's got a lot of positive momentum in terms of government and government drive for what it's doing for the ecosystem in terms of moving it forward, in terms of digitization, openness, free payments, access to bank accounts, which basically enables a lot of fintech to build on top of that. It also destroys a lot of value because you can't go in and back private companies to do those things because the government's already delivered that product. So you got to be thinking bigger picture around what's there and build on top of that. Also, India is built for scale, but it's not built for unit economics. So it's good to build a scale business in India, but it's very hard to get paid in India. But then you flip that to somewhere like Brazil, where unit economics are very wide. It's a smaller market with still 200 million people plus. But the spreads on lending in India, the fees you can take on payments are astronomical. So it's a much different market and different mindset when you go into to play there. Lessons for Pakistan. I'd love to think that Pakistan could take a lot of lessons from India just because it's next door, and then vice versa, obviously, over time. But the playbook that's worked out in India, some of the best-in-class ideas are starting to feed through to Pakistan, and that's benefiting some of the companies that we invest in. But I think the last point I'd make about emerging markets is, and why we invest in them, is they tend to fall off the radar a lot for investors. We tend to like that because we see the companies that are built in these markets through cycle, and people overdo the risk as opposed to return of these, especially at points like this. So as the market is waking back up, as capital flows start to turn again, the US, Europe is getting the first tranches of capital, then India. Now people are thinking about Brazil. Pakistan is somewhere near the back. So it's a good time to be shopping in places like Pakistan because that capital will come back, as true as every cycle is.
And one more quick question, because since we're talking about global trends, one of the biggest trends this decade is volatility in interest rates in developed markets and inflation. So would love to get your take on what type of, specifically, since this is a Pakistan-focused audience, what type of devaluation are you factoring in, let's say, for India compared to Pakistan on an annualized basis? Because that does... I don't believe that in a 10-year curve it makes that much of a difference, but it still does have an IRR performance issue. So what's that number?
No, look, I'll give you the number, I'll give you the logic. But we're all investors on a micro level or a sector level at the end of the day from a venture capital point of view. And we try not to put on our macro hats or our political hats, albeit Pakistan does its best with the noise to try and suck you in again and again, but you try and avoid. We take a general 10% deflator rule of thumb for a country like Pakistan. We put it in the same bucket as, say, in Egypt or in Nigeria, and you can argue pros and cons of different ones. But if you're putting in a dollar investor and you're forecasting out dollar forecasts or local currency forecasts, you have to be deflating 10% per annum, I think. You'll get nothing for 3 years, and then you get a slap at 30%. And we generally do a 3 to 5% for more developed emerging markets and 10% in that category, because you got to be calculating IRR on a fair basis, not fooling yourself off value multiples and like-for-like currencies.
Yep. And then India is what, half of that, 5%?
I think that's fair.
Yeah. Okay, great. Ibrahim, for Pakistan specifically, I know you're looking at a global scale. It's a huge, vibrant market. And there's a lot of, I always forget the name of that one gaming platform from China that keeps getting banned in Pakistan that everybody's playing. Like what is
PUBG.
What's it called? PUBG, yeah. What trends are you seeing? Are you interested in Pakistan as a market? Is it too early right now, or do you eventually see yourself going in and taking stakes there?
The good thing about gaming is that when your kids are playing Roblox, they don't care where it's made. There's no made in USA or made in Turkey when you're playing a game. Gaming is truly global. That's why effectively our mandate is to invest globally. We've picked our niche, that's gaming. In terms of what's interesting to us, the reason why Griffin has been successful, our fund one, for example, is vintage year 2019. We're top 1% performing funds in terms of DPI across all funds for our vintage year. And there's a very specific reason to that, because we believe in building relationships. Something that we're doing in Saudi Arabia right now is, though there may not be opportunities in the short run, we want to be on ground right now to build relationships so that in 3 to 5 years, when founders are building the next Roblox or the next Call of Duty or FIFA, we're the first call. Same thing with Pakistan. Very, very strong market over there in terms of talent and consumer. I've underwritten a couple of companies in India now, one of them being Winzo, which is one of our best performing portfolio companies. There's a lot of upside. I think the challenge is being able to monetize the market, specifically Pakistan. What's interesting to me is studios and founders who are building in that region for a global audience. So that's what I'm looking for. That's where I'm looking at, and hopefully we'll get to underwrite something in Pakistan very soon.
Yeah, consolidation of studios is a massive. There's a massive potential. So, and I'm seeing a lot of that in Pakistan as well. So that's
yeah, consolidation is, it's exciting. Is it a venture scalable model? I'm not sure, but we'll have to see.
John, give us your thoughts on Pakistan specifically, since we have I know it's global track trends, but you've invested in Pakistan, you've built a company in Pakistan, scaled a company.
My general thoughts on Pakistan: amazing people, amazing food, beautiful country. And from an investment perspective, so obviously right now our cohorts are in Dubai and in Riyadh, but our kind of scouting and the potential and the people and the talent comes already from a way bigger audience, and actually it's 70% region, which is MENAP, and then 30% actually globally. So we're attracting people from all over the world to come and then to build something. And as I said, Paradigm is one of these companies, Pakistani founders that joined us in the Riyadh cohort. We invested, and now they're back in Pakistan building a product there. And when I think about Antler, MENAP in the next couple of years, I'm very sure that Saudi or Riyadh and Dubai as cities where we run cohorts currently will not be the only places. And obviously there are places like Egypt, Cairo or Abu Dhabi or Doha. And I hope at some point also there will be a Karachi where we can run our programs, right? That's obviously the ultimate scenario. So for now, we're kind of getting the talents from all around us to come to I would say the strongest cities in the region. And obviously Antler understands itself as an ecosystem builder. We're doing this very much here. We're doing this also in the UAE, and we hope to continue doing this also beyond. And then hopefully at some point, our Pakistani applicants can then also join a Pakistani program at some point, inshallah.
Great. So Ali, I'm gonna. This is a question I'm kind of curious about. So I'll ask you. Is a lot of the crypto market traded with bots and algorithms, or are there actually people there doing it? I always wonder, because so much of the charting and these elements play out in these markets. So I'm just kind of curious that how's this playing out?
Yeah, it's a really good question. I mean, there's obviously bots, right? I think as with anything that's digital, I mean, if you even take trading in traditional markets, go look at how much of that is bots, right? But I mean, even if you go around this room, I'm sure there's a ton of people that have, invested in crypto or are aware of it, right? And, you do that sort of in most places. I think you'll start getting a pretty large number of people involved in the space. So definitely we see a lot. I think one of the things that's different about this space, if we talk about it from like an opportunity standpoint, if you take your typical startup or a lot of different types of startups, right? Like, let's say you're launching a startup in the supply chain space or something like this, you might be focused on, a city like Karachi, or even a subset of Karachi, then maybe a state, then maybe the country, then maybe expand outside of the borders. When you take what's happening in the crypto space, you're basically launching globally from day one, right? So it's a very different way to scale. It's a very different mindset. You know, your users are coming from all over the world. I mean, similar to gaming, even in a lot of cases, right? So I think that creates a very different dynamic when you're scaling a startup.
And another quick question on stable coins. Coming more from emerging it's like Pakistan, where crypto is actually technically illegal trading from they claim it's not, but it is. You can't open an account with a Pakistani passport in any regulated exchange. But what we have seen on-chain metrics is the massive use of stable coins, and there's literally like rupee to USDT conversions. What type of role is that playing in feeding into the overall crypto market? And just wanted to get your overall thoughts on these stable coins and where you see them playing out. Do they eventually exist? I know they're giving buoyancy to the dollar in the long run. The Fed governor recently, one of the governors came out and said that they actually support it, helps the US dollar with buoyancy. But I mean, does this eventually get replaced by central bank digital currencies, or what exactly is the game here?
Yeah, so the stable coin movement, I think it transforms a lot of the world, a lot of emerging markets, right? I think it transforms a lot of the world, a lot of emerging markets, right? You take instability in local currencies, whether that's in like Pakistan or Egypt or Nigeria, or, take parts of, Latin America or whatnot, right? Like these are major problems where people aren't basically are just losing money every day if their currency is devaluing. And so stable coins are a very interesting phenomenon, right? And you take, the ability to, peg against, at least in this case, say a trusted currency or semi-trusted currency, whatever you want to call it, in the US or in Europe or whatever, it actually helps to protect that erosion of value. And then you can go do sort of what you want with it. The fact that this is, in some cases, you're then using different decentralized protocols, investments, savings accounts. I mean, you've got over 1 billion people in the world without identities. You can then actually start doing things like, doing different things in decentralized finance, et cetera, where you don't actually need a passport to open an account. Right. And that actually helps a lot because it opens up a ton of opportunity. It levels the playing field in a lot of ways. And then you've got this movement around like real world assets. Well, real world assets is essentially now, how do you bring yields on chain, right? So if you've got different things happening around the world, how do you actually natively bring those on chain so that someone can earn 9% on their, in their stable coins or whatever, right? By lending it out or doing some sort of action. And I think this actually, in a lot of ways helps to level the playing field. Now, when you add in the requirements for KYC and AML, that then obviously creates some sort of barriers, which is good in some ways because obviously protecting, right, say like anti-terrorism financing, stuff like this. But it creates the negative of it just cutting out a lot of people along the way as well, right? So these are some of the challenges. Now, when you talked about CBDCs are quite different. CBDCs, you're seeing this trend around governments essentially wanting to natively launch essentially their currency, but it's giving them a lot of oversight and a lot of powers. And I think this is where it gets very dangerous. We've been talking about this a number of years. We actually worked with the United Nations around this problem as well. And the big problem is, if you have more and more surveillance on your people and I don't know, if they bought alcohol and you want to prevent that, or they're buying drugs and, you can monitor those transactions or whatever. Now you actually create this regime where you can go after people, long term. It's kind of why cash economies exist. But, over time, as cash becomes less relevant, and then you're going to have this digital footprint that's there forever, it's going to start to create some problems. So, CBDCs in general, I think can be good, but I think it creates a lot of risks, for people long term.
I agree with you on the centralized monitoring and control with CBDCs. But it does give a new form of monetary policy as well, where they can actually effectively airdrop and stimulate different segments of the society that needs stimulus. So good and bad, but yeah, Big Brother definitely becomes pervasive. I'm going to close it off with getting a thought from everyone else on a topic that's really leading the pump in the S&P 500 with NVIDIA, and everybody's just pricing in adoption of AI in 2050, like in the next like 5 months. So but I do think it's very significant change. It's going to have a lot of impact, and I already know how it impacts each one of the verticals that you guys are involved with. So Faisal, I'll start with you. Give me your quick thoughts on AI and how you're using it in your platform.
I think AI is the buzzword right nowadays. So definitely, I think we as humans are learning how this is actually the first thing. So I was interestingly thinking about this. When we think about artificial things, and you say, oh, this is an artificial food or whatever, we always say bad, but this is the first artificial thing that really, we are all excited about. So, and for good reasons. I think it's going to, I was having a discussion with my cousin, yesterday. I think there is huge advantages, right? So I think on the development and design side itself, because it cuts the production time and the design and development time, tremendously. You can do so many iterations of things so fast, right? But at the end of the day, you will be making the decision because, there are some things. Let's take an automobile for an example. You can do probably a lot of iterations on the design side of how the exterior looks, and you will have hundreds of sketches, created for a component in a matter of 10% of the time that you would have probably done in a traditional way using, the same chips that existed. But there is that aspect of the human eye looking at things and then making a decision. So it helps you get from a point A to point B faster, but the final decision is still, stays with you. I think that's something that, we need to keep that. So though from a usage point of view, that is definitely helpful. But then I think there is this interaction, point of view. So once the product is really made, let's say in an electric vehicle, which is a smart car like Lucid Air, once the AI is, induced into this vehicle, and your trips, are much more fruitful because the machine learning, the AI is actually going to give you that, aspect where it can start interacting with you in a meaningful ways. A lot of things can be done. You can actually do your work with prompt. So that prompt engineer, you become a prompt engineer at that point in time. You're also learning at the same time. It is your personal assistant on wheels. So there is just so much that you can do from that point of view. And I think we're just beginning to learn that aspect. Very exciting times. And then, of course, from a hardware side, companies like NVIDIA and others are going to really play a meaningful role. And that's why you see their valuations, reflecting that. But that is where I think, we need to play because really those work streams that are coming out of that, I think from an educational point of view, from gaming point of view, from fintech point of view, I think there is just so much that we have to learn. We're just hitting the beginning of that right now.
Yep. And I think a lot of the audience might be too young, but I think it's like Knight Rider coming to life eventually.
Exactly.
So the AI coins that have been pumping like crazy, each cycle there's something, right? There's like NFTs, there's ICOs. So what do you think? Are a lot of these real? Do they have use case? Or again, it's just everybody going crazy like all markets?
I mean, of course, there's a lot of hype around it. Now, the interesting thing about obviously some of these coins is they take advantage of that. Now, behind the scenes, there's obviously a lot of really great companies doing things with AI. And, we're big believers in the intersection of critical technologies, right? So you take AI, blockchain, and IoT together, and you got essentially like, the decentralized physical infrastructure industry, or DeepIn, which is an area we've been investing in quite a lot right recently. You take gaming and AI and blockchain, and you've got a lot of interesting opportunities. And we're the first backer of a company called Altered State Machine, which we recently had a 9-figure exit on. And they launched, for example, the first AI football league with FIFA, but a lot of other really cool things. And like, essentially, how do you create uniqueness in gaming? And everything can evolve in the same way that, say, like human DNA evolves, right? And so you start getting some really interesting things that you can start to build as you put AI into things. we recently with Breshna launched the first AI game creator. So you can literally create a hyper casual game in seconds with AI, right? And so you got like these really, really cool things that I think are pushing the boundaries, creating even markets that maybe didn't even exist before. And we see, tremendous opportunity around that.
Great. John, what are you seeing?
Yeah, so as I said, we had 5,000 applicants and now we have 80 people in the cohort. So to get from 5,000 to 80, me and my team and my other partner, we're interviewing a lot of people. So for this program, I interviewed over 160 people. And obviously I asked them, when I interview them, so what do you want to build, right? And then I don't know how many times I heard, oh, I want to build this like super assistant and AI, and I couldn't hear it anymore, right? So, and what's interesting for me is that we're all excited, and I'm very excited, but I believe that actually the real potential for us as a VC is actually in the less exciting stuff, is actually in the real replacing stuff. So I'm almost calling out now for founders to join us to actually look into industries, and we have billions of companies or worth of companies and markets where there is people copying stuff from A to B. There is people reviewing stuff, analyzing stuff, accounting, law, and all these kind of industries where we do simple tasks. And there's a lot of people doing this. There's even lawyers that need to spend every month hours on doing billing and all these kind of things that are not so exciting in the first place. But I believe with the AI today already, and developing over the next couple of months and years, we can build businesses there that will really revolutionize sectors in the way they work. And that's not very exciting because it's very much in the background. But for us as VCs, that's where I see a huge potential. These are the companies I would love to invest in. In someone like we're investing, for example, now in the UAE in a company. They are actually in the tech space, super boring. And literally they do all the accounting automated, and you don't need to understand accounting, you don't need a tax attorney, anything. You're just a business owner and you do everything on a platform, and you just throw all your documents literally at your browser, and the machine is doing the rest. This is the business that I'm getting super excited, even though they're very much in the background. But I think for us VCs, that's really what we want to see right now.
It's really exciting times because in Pakistan, what I'm seeing, obviously the big like ChatGPT and Gemini, I mean, that's the big tech. That's like operating systems effectively. It's like as exciting as what was happening when the smartphone operating systems came out, and there was a whole app revolution. So the use cases are very interesting, especially in our region.
And this is the same when when the internet arose, right? Like think what happened from offline to online, how the world completely changed, and then went to mobile, and everything completely changed. And I think AI, I mean, everyone knows, is that next wave. But when we think about what does that mean, that next wave, is it that we all kind of now use ChatGPT? I don't think so. Actually, the next wave is that industries will be revolutionized in the background, actually, before then the super exciting stuff comes in.
I haven't written a real email in like 6 months. It's all on ChatGPT. Ibrahim, what's going on with AI? Are you taking all my kids' data from Roblox and like profiling them?
Basically. But no, just adding on to what you said, as an investor, AI on its own doesn't mean much to me. Applied AI is where it gets exciting. A really good example is we have a portco called Modal AI, and what they're effectively doing is they're revolutionizing the QA ecosystem within gaming, which hasn't really been touched for 25 years plus. It's a super labor-intensive activity when it comes to gaming, where effectively on the outside it looks super sexy, where I'm going to play a game all day long, but you're just going back and forth for 12 hours in a day. So utilizing AI for something like that makes a lot of sense. I think as a gaming investor, I've talked to in the past year about 450 plus AI and related companies. It's very exciting for the ecosystem. We just published a report. 70% of game developers are using AI in some way, shape, or form. But that being said, AI within gaming isn't new. A lot on the tool side of things, it's been quite exciting in terms of efficiency. So there's a lot of upside over there. From an investment perspective, and this is me speaking as a late stage investor, and some, I do pre-seed to pre-IPO, but Right now with AI, I'm more late stage and I'm comfortable over there. And that's mostly because the companies I'm speaking to are not competing on tech stack. They're utilizing the same LLM. They're effectively competing on the team, which is obviously very important, but more importantly, marketing and biz dev. How does that scale? I'm not sure. I know the larger studios are building their own tools in-house because these tools are not difficult to build. And for gaming companies, what's really, really important to them is their data. So they're just layering their data on top of those LLMs and building their own tools. There's a big market for indie and venture-backed studios. And that's where some of these companies that we're talking to, it's interesting. But the challenge is what's stopping NVIDIA or Unity to push out their own tool? Nothing really. So in that regard, I'm completely okay with waiting it out and seeing who the winners are and just underwriting them accordingly. But then there are going to be winners, even right now, early stage, like Modal AI, who are building products for a very specific reason. So yeah, as a whole, excited. As an investor, I'd rather wait kind of thing.
Amazing. David, are we going to get social scored or credit scoring engines coming in? What's happening in fintech?
It's coming, but just to the question, I think the last two guys, Jonathan and Ibrahim, covered a lot. Like from our side, we hate the buzz trend, but we can't but see the benefits of AI. It's obvious, but we hate rushing to a point with everybody else. And where we've been spending our time and where it's the most logical, obvious positive for us is through working with our portfolio companies, especially the later stage ones in financial services, really around customer acquisition, customer communication, cost basis for the firm. You can actually see a lot of savings, unit economic increase to our companies from embracing AI, which is happening this year off the back of a lot of work and thought last year. We're starting to see it coming through in some of our companies internally, but also I think the biggest name that's come out and said anything really tangible is Klarna, and they came out with some real statements of fact about savings that they're doing, about transitioning from people on the customer service side to digital humans. The implications of that on a cost and operating profit point of view. And you're going to see more and more of that coming through. So I think it's just what benefits the current portfolio through the benefits of embracing AI as opposed to investing in AI through financial service or fintech yet for us at this stage.
Excellent. Gentlemen, thank you so much. And really appreciate everyone that's still here. I know it's late, but you guys sat through it, so appreciate it. Thank you. Can we get a round of applause, please? Thanks.
Thank you, everyone. It's been great having you all here. We hope that it's been enjoyable, it's been productive. Last announcements, we will be hosting the next Paklaunch Unconference, inshallah, in San Francisco towards the end of the summer or beginning of fall. Date to be confirmed and announced separately. More importantly, dinner is in 15 minutes at 8 p.m. At a French-sounding restaurant beyond the main reception. At 7, no, they said 8 now. So shortly, it's on the same floor, ground floor, towards the end. You should see some directions, or people will be there. So see you at dinner, and thank you once again. Thank you very much from all of us. Bye.